Ladies and gentlemen, good day and welcome to the Relaxo Footwears Q2 FY2026 earnings conference call hosted by IIFL Capital. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. I now hand the conference over to Mr. Sameer Gupta from IIFL Capital. Thank you, and over to you, sir.
Thanks, Sudha. Good evening, everyone. At IIFL Capital, it is our pleasure to host the management of Relaxo Footwears. From the management, we have Mr. Ramesh Kumar Dua, Chairman and MD, Mr. Gaurav Kumar Dua, Full-Time Director, Mr. Prince Jain, CFO, Mr. Ritesh Dua, Executive VP Finance, and Mr. Ankit Jain, Company Secretary and Compliance Officer. Without taking more time, let me hand it over to Mr. Prince Jain for their opening remarks.
Thank you, Sameer. Good evening, everyone, and thank you for joining us on our Q2 and H1 FY26 earnings call. We appreciate your continued interest in our company and are pleased to walk you through our operational and financial performance for the quarter and half year ended 30th September 2025. The earning release and investor presentations are already available on the stock exchange and on our website for your reference. Before we move into Q&A session, I would like to highlight some key performance metrics for Q2 and H1 FY26. Revenue from operations stood at 629 crores in Q2 FY26 as against 679 crores in Q2 FY25. The moderation was primarily due to demand softness in the mass market segment and delayed purchases ahead of implementation of GST 2.2. However, we are now witnessing a gradual revival in demand following the rollout of new GST framework. EBITDA for the quarter stood at 81 crores. EBITDA margin remained stable at 12.9%, supported by continued operational efficiency and prudent cost management. Profit after tax for Q2 FY26 stood at 36 crores as compared to 37 crores in Q2 FY25. PAT margins improved by 35 basis points year-on-year to 5.8%, reflecting disciplined cost control and stable pricing despite muted top-line growth. During the quarter, we witnessed recovery across channels, with general trade continued to contribute higher share to overall sales. The rollout of GST 2.0, which reduced tax rate on footwear priced below 2,500 to 5%, has strengthened our competitiveness versus the unorganized sector and improved affordability in the mass and mid-market segments. Our continued focus on cost control, operational efficiency, and back-end optimization helped maintain healthy profitability levels despite a challenging demand environment. For the first half of FY26, revenue from operations stood at 1,283 crores as compared to 1,428 crores in H1 FY25. EBITDA for H1 FY26 stood at 181 crores versus 187 crores in H1 FY25. However, EBITDA margin expanded by 101 basis points to 14.1%, reflecting the success of our cost rationalization measures and efficiency initiatives. Profit after tax for H1 FY26 stood at 85 crores compared to 81 crores in H1 FY25, an increase of 4.9% year-on-year, with PAT margin improving by 95 basis points to 6.6%. Looking ahead, we remain optimistic about the recovery trajectory and expect momentum to strengthen in the coming quarters, supported by festival demand, GST benefits, and our ongoing sales transformation initiative. Our strategic focus remains on driving volume-led growth, expanding market share, and ensuring sustainable, profitable performance supported by our portfolio of affordable and high-quality products. Thank you. The floor is now open for questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Devanshu Bansal from Emkay Global. Please go ahead.
Yes, sir. Hi, thanks for the opportunity. So you've stressed on tailwinds from GST reduction. So just few things I wanted to understand. One is currently what is the anticipation for growth pickup? Because this is a very big step, and the industry was sort of vouching the government for reduction. So that is one. And secondly, currently, the high price inventory is in the channel. So what time period do you foresee it will take to sort of flush out the entire high price inventory, so that we see a round of timely bookings again? Thirdly, so the industry checks also suggest that for certain categories, the industry has entered into an inverted duty structure. So do you foresee any sort of margin issues because of that? So these are the three questions that I wanted to understand.
So hi, this is Gaurav Dua. So I'll answer your first two questions, and third will be answered by our CFO. So your first question was regarding the GST. It is well appreciated by the footwear industry that GST has the reduction of price from 12% to 5%. This will definitely help us to grow, as we will be more competitive in the market, and we will be able to face the unorganized competition. Secondly, regarding the stocks, we ourselves carry around 30 to 35 days inventory, and the channel, which is distributor, also carry around 45 days inventory. So the real effect we'll start seeing from December end and January onwards. So right now, distributors are more focusing on liquidating the old MRP, which is a little higher, and doing a little correction in their inventory. Regarding inverted duty structure, Mr. CFO.
Hi, this is Prince here. Inverted duty structure, yes, with the GST 2.2 implementation, our outward duty is now 5%, and most of our imports remain at 18%. So yes, we'll fall into inverted duty structure. We have done broad level estimation, which suggests that while the refund formula from which GST law allows will take care of bulk part of our inverted duty structure, but some part of the duty which will not be refunded would still remain. So we are waiting and watching another 2 to 3 months how this pans out, and then planning to take actions. As of now, we don't expect GST 2.2 implementation to have impact on our margins.
Just small follow-ups, Gaurav and Prince. So obviously Q3 may be impacted because of this, but starting Q4 and maybe for FY27, what is the reasonable growth expectation from your business, right? So we have seen very muted trends over last few quarters, years. So what is a reasonable expectation of growth from Relaxo? And to Prince, have you sort of taken this impact, the impact that is remaining after the refund formula, through lower price cuts? So have you sort of baked in this impact through lower transfer of pricing cuts so that our margins remain intact? So if you could just confirm on that.
Sure. Let me take the second question first, and then I will let MD answer the first one. Regarding the price corrections, we have taken full price corrections to the extent of GST cut. We have not retained anything right now. So, and hence that's why there is no impact, neither positive or negative, as of now on our margins. But as I mentioned, how inverted duty structure pans out, we'll have to wait for next 2 to 3 months. Very early to say, but we feel it is manageable.
Okay. And on the growth expectation?
Yeah, carry on.
Yeah.
On the growth expectation. Yeah, on the growth expectation.
Yeah.
I got it. I am Ramesh Kumar on this side. First of all, in the first quarter we were minus 12%, second quarter we were minus 8%, and in the third quarter we are expecting this either we will be same or minus 3-4%. That I am expecting. And in the fourth quarter, that is January to March, I think we will have some growth, but that we cannot say we have to wait and watch the condition. We must appreciate still consumer sentiments still are muted. Because the economy, because that is why government is doing so many things to push the economy. So we have to wait and see. But one thing is sure, that now since we have become very competitive, the way industry performs, we will also perform similar way or maybe better way. So let us see how the things shape up. Next year is definitely going to be a much better growth.
Sure, sir. Sure, Mr. Dua. Thanks for taking my questions. I have a few more questions. I'll get back in the queue.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Shraddha from SMIFS. Please go ahead.
Hello. Am I audible?
Yes.
Yeah. So I just wanted to understand that the other income for this quarter has gone up considerably. So is there any one-off item in that?
Hi, this is Prince here. No, actually there are no one-off item. Our treasury base versus last year has been higher, and that has led to our other income being higher. And minor impact is because of the hedging gain that we have got because of the rupee depreciation.
So this would be a similar number which we can expect for future, right?
Similar number, yes, we can expect. In future, we are also expecting, given the inflation numbers are coming down, government may reduce the interest rates, which can boost our other income in the subsequent quarters.
Sure. Okay, that was helpful. Also, sir, if you could help me with the closed footwear contribution in terms of volume and sales. Also, do we have any plans for increasing the capacity in the closed footwear?
So Shraddha, this is Gaurav this side. So our closed footwear contribution is roughly around 20%, and 80% is open footwear. And regarding capacity enhancement, we already have a good capacity. So it's not there right now.
Not required.
Not required, yeah.
Okay, sir. And just one last question from my side. If you could help with the advertisement spends for the current quarter.
Advertisement spend for the coming quarter and full year is expected to be around 4% of the revenue.
And okay, sure. That was quite helpful. Thank you and all the best for future.
Thank you. The next question is from the line of Sameer Gupta from IIFL Capital. Please go ahead.
Hi, sir, and thanks for taking my question. First question, sir, is that this quarter has multiple moving parts. There is early festive. There has been a rationalization of distributors exercise that we have been doing since past few quarters. General trade would have destocked following announcement of GST rate cuts. Probably some restocking towards the last week of September. So if you can tell us, normalized for these events in your assessment, what would be the actual volume and sales growth or decline this quarter?
So it's very difficult to right now assume because just October has ended. So definitely in some parts of India, the distributor are carrying a lot of stocks with them. So how long will it take to clear the stocks and new MRP hitting the market? It's very difficult to give exact numbers. Yeah.
I was actually asking the September quarter normalized growth rate in your assessment, the end level, consumer level, growth or decline in your assessment.
So the number that we have reported for quarter 2 is minus 7.5. As Gaurav mentioned, it is very difficult to estimate because we don't have full visibility on the distributor level of stock and how much they have downstocked. So very difficult to estimate and say without the impact of downstocking how much would have been the quarter 2 growth. I think would have been better at least 200-300 basis points, but that's a ballpark estimate.
Yeah, it's an estimate.
Okay. So, and for my understanding, sir, just trying to understand this, why would the distributor not start purchasing now? Because typically footwear is not on an MRP regime. You can just lower the price and sell it, and the tax rate is adjusted already. So why should this impact overall primary sales?
So basically, distributors are a little worried about input. So they are worried that will they get how they have to adjust this input, GST input. They have bought stock at 12%, now they'll buy at 5%. Whatever the remaining stock they have, how they will able to adjust it. So that's why they are preferring to clear the older stock first and then buy the new inventory and sell in the market.
Just to build on that, when government...
Go ahead.
Sorry, just to build on that. When GST 2.2 was implemented, while race rationalization was on the cards, we were also anticipated government to provide some relief to the retailer and distributor and to the companies where inverted duty structure is coming into play. That would have sorted some sort of the problem for the distributor and retail. As of now, government has not provided relief to footwear industry or not to any other industry. So as of now, every business and our distributors have to deal with the closing stock or the stock they purchased prior to 22nd September in their own way. As of now, our distributors, the way they are managing, they are trying to reduce purchases. Same is what our retailers are also doing. They are trying to liquidate their pre-GST, old GST stock, and then once their inventory comes to a reasonable level, the purchases will start coming up. Is the broad level answer is what we should have.
But if we say about secondary... Continue.
No, sir, go ahead.
Yeah, what we are seeing is at secondary level, the stocks are moving. So that is more important, that the consumer offtake is happening. So I think they will be easily clearing their stock, what they have. So consumers are excited to listen that the new prices are happening in the market and it's lower than before. So footfall has increased.
Got it, sir. Just another one on the same point. So the announcement happened on 3rd September. So I would assume the distributors and retailers would have stopped buying at that point. And you mentioned 45 days channel inventory. So it has been a reasonable time now that the old price inventory would have got cleared. Your thought?
Yeah, but we are supplying across India, so there are some distributor who keeps a lot of stock with them. And in some places like North India where they keep less stock, there we are seeing the result, they are buying the newer stock and selling in the market. So for whole India to be covered completely, we are seeing in December, mid of December, we start seeing the impact. So
and you still expect a primary decline in third quarter?
As of now,
no. It could be a lot better than what it is in this quarter. Very insignificant loss, if at all, it will be there. Maybe we'll be at same level. Last year we may achieve that or not. We have to wait and see.
Okay, because in the first question you mentioned like -4 or something. Did I hear it correctly?
Yeah. No. It was 80% this quarter. Next quarter could be -4, maybe even better results may be there.
Okay. Fair, sir. Second question, sir. Percentage of portfolio which is below rupees 1,000 and between 1,000 and 2,500, if you can help me with that.
Only 5%.
Yeah, so it's majority is below than 1,000 rupees. So you can say more than 90% it is less than 1,000 rupees. And even more also, you have to check.
Yeah, and this is Prince here. Now with the revised limit of 2,500, more than 98% of our portfolio is priced below 2,500.
Yeah, having 5%.
Got it. That's fair, sir. Fair enough, sir. I'll come back in the queue for follow-ups.
Thank you. The next question is from the line of Prerna from Elara Securities. Please go ahead.
Thank you for the opportunity. Just wanted to understand your product strategy in terms of open footwear versus closed footwear. In this challenging times, how are you thinking of increasing the share of closed footwear when this open footwear is facing challenges to sell or whatever challenges we are having at the macro level. Could you help us understand whether, how this strategy is moving, because you are planning to increase the share of closed footwear and that is not happening since a few years now?
Our focus remains, we have to handle all the categories of footwear what we are having. Not that only one category, because all categories are important. If you see the share of our closed footwear is 20%, 80% still is open footwear, so we can't neglect open footwear also. And if you go brand-wise, Sparks is 40%, and our Muhammad Relaxo combined is 25%, Flight is around 38 or something. So all channels require, and all categories do require focus, and we can't afford to neglect any. We have to focus on all.
I completely agree, sir. But the whole point is the closed footwear share improvement could also bring in improvement of margins, and that is what we were assuming that this should happen. And the share is not improving. So hence, if you could help us understand what is the growth rate in open footwear versus closed footwear, that would really help us to understand the company better.
Yeah, even last year, full year, it was 80-20 only. And now also it is 80-20.
Okay, so the decline
is
uniform.
Yes. Decline is uniform.
Oh, yeah.
Oh,
right.
Okay. And sir, also please help us understand how are the new launches in the company, and which segments are you focusing? Are you focusing on sneakers and other categories as well, which are higher value? And now that GST is at 5% after 2,500, will you be launching in a higher price inventory, etc.? Some thoughts on premiumization would help.
Definitely, as we have told you before also, that we are focusing on athleisure and sneakers. So that is continued. The effort is there on that. We are launching product accordingly. Secondly, we are going to launch premium PU, which comes under Flight. So our objective is to how we can increase the ASP and provide the relevant product to the consumer. So efforts are being put in. Like Flight, last year we launched Urban Basic. Again, it was a premium range. So every year we try to, if we get the opportunity to launch a new category, we definitely do.
Okay. And her question is on competition. Is the competition still fierce after GST implementation, or is it the subdued demand, or is it both?
Competition is always active, but like when the GST was 5 and raised to 12%, there was influx of a lot of unbranded and smaller players, and the prices of raw material also came down that time. But now, after GST being again rationalized from 12 to 5, now we are more competitive in the market, and we will gain market share.
Okay, and prices continue to remain stable from that period?
Yes.
Okay.
Yes.
Understood, sir. Thank you, sir. All the best.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Akhil Parekh from B&K Securities. Please go ahead.
Yeah, thanks for the opportunity. So my first question is on the BIS front. Has the implementation been done, and where do we stand, and has the Chinese imports now dramatically reduced since the imposition of BIS?
No, we have already implemented QCO long back, and we're continuing with that. It is a government's policy, and that we have to done. We have done already.
No, but has the Chinese imports reduced because of the BIS implementation?
It is very insignificant. The category we are playing in, like our Bahamas, White Slippers, Flight brand, it was insignificant. And the category that we are making in our sports brand also, that kind of a thing, I don't think we had any impact on it. It was government decision to do that, although we had registered for that also. I was in favor of some import must happen. That keeps the company industry on the edge, and its competition is only which makes the industry strong. By avoiding competition, nobody becomes strong. But if the government isn't to do that, and that's okay.
Okay. So when you say that we will become more competitive against the unorganized players, so does that mean they are just manufacturing it domestically and not the imported players?
No, when we say getting competitive in this, because of GST coming 12 to 5 and also 18 to 5, that makes them more competitive.
And so second question on the current capacity, what we have, is it enough for us to grow for say next 2-3 years?
Yeah, presently we have enough capacity.
And last question, in terms of the general trade transformation, which we had highlighted last quarter, or on the last Concall, that will focus more from primary to secondary. How has the feedback been on that front?
So last call we have discussed few points, like I would like to repeat, like we are working on addition of distributor. Second point was last mile connectivity, that is logistics. Third was the focus will be more on secondary sales. So we have introduced RPA, which is Relaxo Parivar app, and we are seeing there is a 20% growth happening at secondary level. So the contribution of app in terms of sale is around 50% last year, which has come to 60% this year. Regarding product innovation, we are definitely lookout for the gaps in the market and launching product accordingly.
Sure, sir. This is helpful, and best wishes for coming quarters. Thank you so much.
Thank you. The next question is from the line of Devanshu Bansal from MK Global. Please go ahead. As there is no response, I take the next question from the line of Sameer Gupta from IIFL Capital. Please go ahead.
Hey, hi. Thanks for giving me the opportunity again. Sir, just wanted a more strategic kind of a question. Last 4 years, including this one, we have seen persistent weakness in top line. I understand the GST rates had about increased, but if you have analyzed data over these years, just wanted to nitpick, which are the areas where there are bigger pain points? Is it metro towns? Is it younger consumers, lower price points, higher price points? Any kind of color you can give regarding any analysis that you would have done on, where the weakness was?
So it is, all categories, because taxation has only played a role. Since January 22, when the government implemented this new taxes from 5 to 12, that became actually one of the main causes. 90% causes that only.
So now with that reversed, we should logically go back to the old growth trajectory of 10% plus. Understand
Sure.
The disturbances in between, but as things stabilize, it's logical to assume a 10% plus kind of a growth is what we should expect.
Yeah, it is just a matter of time. The company will be back on track the way it was before January 22.
Got it, sir. And you had indicated a rationalization exercise of distributors 2 quarters back. Are we done with it? Is it still ongoing? Anything you can share on the results of the exercise?
So it's an ongoing process. Like we keep on adding distributor and rationalizing the distributor who are not performing. So it is every month activity. It is not a yearly activity. So we are working on it and we are getting good response.
But we had indicated an exercise at that time. Of course, adding and deleting will continue, but that pronounced deletion is over, or is it still ongoing?
No, it is I'm saying it is an ongoing process. Like that time we have taken a charge of appointing many distributors, which we have done it, and this is a continuous exercise. Every year we keep on adding distributors and rationalizing the non-performing distributors.
Okay. But the declines that we have seen in the past 4-5 quarters is not because of this rationalization exercise. It was more of a performance of the company that has got impacted then.
Yes, you're right.
Okay. Okay. Fair, sir. That's all from me.
Thank you. The next question is from the line of Devanshu Bansal from MK Global. Please go ahead.
Yes, sir, there is a lot of fake products being manufactured under branded logos in the North market. While BIS and restricts imports, but does that part of industry also get impacted with this GST reduction? I'm talking about all these branded logos, fake copies of branded logos that are being manufactured in huge quantities.
So, it is always happening, and we are always taking action. Some police raids also. It is ongoing. It has been, it will continue, and we will keep on acting accordingly.
So, but does that, why I'm asking, does this GST reduction also increase your competitiveness versus that market, or that will still continue to flourish?
We are taking our action on that. Anybody who we came to know and is using our brand name, copying the things, I will continue. I don't think this menace has increased in the past few quarters or so. It's under control. And we keep on acting the way we get news. That's it.
So you have been acting, but there are copies of other MNC brands also being manufactured, right? So I was checking from that perspective.
No, from that point, why we are bothered about those brands?
But they are available at your price point. They are acting as a competition, right? So my concern was from that perspective.
The customer is different, the buying behavior, the customer expectation is different. People who buy Nike fake and people who buy, Sparks is completely different.
Oh, so you're saying that the consumer profile is different. Okay.
Yes.
Okay. And so you mentioned that liquidation will take time, and so this price reduction, has that started to reflect at retail level, or still the old prices only the retailers are selling to consumers as of now?
So it depends upon market to market. Like northern market, new prices have already in the counter and consumers are buying it. But in eastern market, south, southern or western market, still distributor, whoever is carrying more stock, they are trying to push the old inventory first. But we are hopeful by December end, I think it will be cleared. All stocks will be cleared.
But who else, sir, was this in the North market I'm checking? So this liquidation happened at the old price, or it was enabled by the company that we will provide you some incentives, you liquidate the old stock? How does this typically work, this exercise?
So we have not provided any extra discount to clear the old inventory. Only thing was when the price was reduced, automatically the margin increased for them to buy the high MRP stock. So first they have taken that stock where the margin was higher because there was a difference of 12 to 5. So they are focusing there and then clearing that stock. Then after that they started buying the new MRP stock.
Understood.
And whoever has the less inventory with them, they will definitely buy the new MRP stock and sell in the market.
Understood. Last question. So this MRP has reduced with GST reduction. I wanted to check on the channel partner commission. So typically in the industry, these commissions are percentage of MRP terms. So do you, how are you sort of planning there? So does that still remain in percentage of MRP terms, or people are asking for a slight increase in incentives?
No, our margins are similar what it was before. There is no change in the margin.
No. The same trade discount, sir, whatever it is. It is not based on price. Whether it is price 2,500 or it is 200, our trade discount is same. And it will remain same. No change after GST.
Okay. So, don't you think that these trade partners are at a disadvantage because MRPs would have reduced and now they will get lower absolute rupee amount if they sell the same product? So how do you deal with that kind of a situation?
No, ultimately they say how much business they are doing. If the business grows, they have no issue at all.
Okay. Fair enough, sir. Yeah.
It will have a positive impact on the volume growth.
Understood.
So they should get the relief on that front.
So typically your retail level is MRP minus 40 and your distributors would be like, say, 10% of MRP. The ballpark, these are the commission rates, if you can confirm that.
Retailer, they 30%.
Retailer margin.
Retailer margin. And distributors, we give 9% trade discount.
9% of MRP, right?
Not MRP. Of our wholesale price, at the rate at which he will sell to retailers.
On that 9% is his commission. Okay, sir.
Yeah.
Thank you. The next question is from the line of Prerna from Elara Securities. Please go ahead.
Thank you for the opportunity again, sir. So just wanted to understand, is the industry also going through this pain of decline in sales, or is it with few players like us?
The organized industry is very limited. The people who are our competitors or local players, we don't have data of it. We can only compare ourselves with ourselves. We know that our sale has gone down and we are working on that. Because we have noticed that unorganized player getting some share, but the data is not all visible.
Okay. So, we cannot say with surety that the industry is also going through the similar pain as of now.
The organized player must be suffering. The way we are suffering, even you will see Bata results also got affected this quarter. So all these players are definitely going through. And particularly the companies who are serving middle segment or lower segments.
Okay.
They are more affected.
So, this could be because of the D2C competition also, which is increasing in the open footwear as well as closed footwear. Both the categories, like new brand launches, etc. are happening. Do you think that is also one of the reasons, apart from unorganized smaller players, which is impacting growth for organized players?
No. Smaller players, there has been a tax difference. And that they had been manipulating. And that is why they were able to get entry into them. After all, whether it's retailer or distributor, they always want to make more margin. Once they get this tax also advantage, so they generally try to push that. That was the reason that our sales were getting a little bit affected.
So now that GST rate have come down, and you mentioned that we are now more competitive, have you also reduced some prices to compete with these organized players? Any price cuts taken, and going forward, do you plan to take any further price cuts to regain market share?
No, we already have done this exercise. After all, when the tax has gone down, new MRP we have now done, and now we have made all articles accordingly, and we have become quite competitive.
Okay. So then, sir, as you mentioned earlier that there should be a 10% growth. You should return back to 10% growth. Do you see that coming in next year?
I hope so. The next year, but we will see some growth also in the fourth quarter of this year. And then next year is naturally going to be better than this year.
Okay. Understood, sir. And sir, any CapEx guidance for this year and next year?
Prince can tell that.
Hi, this is Prince here. CapEx will be in the range of 120 crore plus, which is similar to last year. And since we have enough capacity, this is more to do with operational efficiencies, warehouse modernization, and building our HO. But broadly in this range, about 100 to 150 crores is the rate that we are looking at for this year and next year.
Okay. And this will be largely maintenance and mold-related CapEx?
Yes. As I said, operational molds, modernization of our warehouses, some plant renovations and, building our HOs. But yes, broadly on these lines. We are not looking to expand capacities and CapEx at least in the next 18 months.
Understood, sir. And so last question on this competition only again. Do you think that, with GST reductions and everything that is coming in, consumption as a whole should grow and new launches should help you gaining some market share from next year? Because what we are trying to understand actually is not able to understand this degrowth over the last 2 quarters. This quarter is still okay that there were disruptions, but last again Q1 and Q2 and even Q3 there is degrowth. So what will really drive growth for the company and market share improvement, whether it is some strategy at the distributor level or some strategy at product innovation, which would turn around, consumer minds towards our brand and, seek the products. I mean, I'm just trying to understand what could go right for us.
No, first quarter, second quarter, the GST was the main culprit. Now, GST has been brought down. Now we will be very competitive, and that will make the things happen. As for product is concerned, that exercise is always there, how to develop good products, market relevant product, but pricing when becomes a limiting factor, then that was the main reason retailer always wants to maximize his margin. So wherever he gets margin, he start pushing that. But now we will have a level playing field with all the other players also, whether they are local or others. So that is why now things will happen better for us.
They can still give higher margins and still push retailers to push their products, no? I mean, if distributor margin is a problem.
No, margin is not an issue, ma'am. Issue was our price versus local players. Those who were not paying any tax, so that advantage they had.
Okay. Understood, sir. Thank you once again, sir, and all the best. Thank you.
No, thank you.
Thank you. As a reminder to all participants, you may press star and 1 to ask a question. As there are no further questions from the participants, I now hand over the conference to the management for closing comments.
Thank you, everyone. This is all from our side. We thank you all for joining the call. Looking forward to joining you again. Thank you.
On behalf of IIFL Capital, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
If you found this video helpful, please like, share and subscribe to Concall India for latest upcoming Concall.